Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through the comments section on YouTube. I'm going to answer some of your guys' questions, throw in a hint or dash of my financial opinion as we go. Some of it's ratio related. Other things are just kind of questions questions that you're asking me, like if I'm already a millionaire, why am I doing this? Stuff like that. I'll answer all those questions. We'll go through them together. I'll give you my opinions of why I'm doing this and my opinions on the questions that you guys have. So let's dive in and see what people are talking about. Someone says, let me make this a little bit bigger so everybody can read it. The Big Mac index is used to measure inflationary trends. Maybe could use what a gallon of milk costs or something. I don't even drink milk, guys. um, what I don't think any of that matters as an investor. In the consumer price index, when you measure inflation, is just a made up. It's just a made up index. They do whatever they want for the consumer price index. They can do hedonic adjustments. They can do substitutions. They can say that a washer or a dryer is 50% better, even though the cost went up 30%. But since it's 50% better, it actually went down in real terms. And it's a joke. In my opinion, the best things that were made, a lot of the best things made were in like the 2004 era, like the mid 2000s. They made really reliable washer and dryers. They were pretty affordable. There's a lot of good things that were built in that time frame. There's a lot of good cars. After that era, like in the late 2010s, 2020s, just seemed like the quality has dropped off and the price has gone up dramatically. um, Someone made a comment. I fixed my washer, and it was like $150 part, and I bought a washer and a dryer a little while ago for like $100. I've been using it for 5 years, doing 3 loads, 4 loads a week, generally speaking. So that thing's been a workhorse, and I paid $100 for the washer and the dryer, and I had to put a new timer on it for it's like $150 or something like that. I put a brand new timer on it. I bought the part myself, put it in. It took literally a half hour at most. And someone said, "Why don't you just buy a new washer?" Why don't I buy a new washer? You know why I don't want to buy a new washer? Because the new washer is not going to be as reliable as the washer that I have. Mine's an older Whirlpool, like the one that the washer that you really want to have, the one that's direct drive underneath, like that's the one I wanted, and I got it for $100. It's like, dude, that's cheap, and they're very easy to fix. The new stuff's all electronic, and it costs a boatload of money. Some of these things, like a new washer and dryer, it's like $2,000-3,000. In all honesty, guys, I don't even know if I owned that amount in clothes. Like I'm a guy who wears regular shirts. Like this shirt underneath here, this is just a regular red shirt. There's nothing on it. It's a Gildan soft sponge shirt that's like $2 a shirt. It was like $1 something when I probably bought it back in the day. But they're super cheap. I don't advertise anything on the front of my shirts. I mean, outside of this guy, which someone made it for me, and thank you whoever made it for me. I can't remember who made it. I think it was Sean or somebody. But that's me. That's what I do. I don't. If I have 2 million, 4 million, $10 million, I'm still going to be the same person that I am right now. So none of that's going to change. So being an investor, knowing if it's inflation or deflation, and using the Big Mac index, I don't think that matters. It doesn't mean anything. It's all made up anyway. You can use the Big Mac, and you know what they do with the Big Mac? They just shrink the crap out of it. If you looked at the 1970s, the Big Macs were like this. Now they're like the size of my fist. I mean, they shrunk that thing way down. So I don't think it's a good measurement. It's much like our currency shrinking in its purchasing power. The Big Mac is shrinking over time. So a better measurement of inflation is the price of gold. And that's why they are trying to manipulate the price of gold. They're trying to hold it down. And what that effectively does is it holds the entire commodity complex down, but they're not going to be able to do it for long. Don't worry. This thing's going to break, and they're not going to be able to do it for long. So let's keep going. It says, wait, the oil to gold ratio suggests that either gold is going to go down or oil is going to go ballistic, or both. Well, not necessarily. You can have both of these go up at the same time and the ratio still compress. During a wave 3 move in a lot of these commodities, they all go up, but some go up more than others. I have gold pulled up here already. Gold looks really bullish. What this is a gigantic flag pattern measured in dollars, and we're breaking everything to the upside. So everything below us is support. And we're knocking on basically highs here. We're knocking on that resistance level. And I think gold's going to go up eventually in the US dollar. Gold's already gone up against all these other currencies. It's just going to go up last against the dollar. Now, crude oil is going to rip it. It's going to rip it. Obviously, I'm in the triple digit, well into the triple digit camp. And that's why I think oil is eventually going to go. Why do I think that? Because they're going to print a bunch of money. And it has nothing to do with supply and demand in the sense that people are going to like have demand, innate demand. It's going to be credit that comes into the system, which is going to be demand for just things in general. That's what's going to filter through oil prices and then eventually filter through the consumer price index and all that other stuff later on. Why do I hold that view? Well, one, gold's sitting on top of a pattern here, and that looks ready to go to the upside. Sideways or higher is my guess on gold. You go look at like a gold. I'm going to do a crude oil to gold ratio. We look at that, and this has broken a consolidation. This is your consolidation here. This is your 1, your 2, your 3 hump. This is your break out of that consolidation. This is your retest. And I think this is going to go all the way back up, where crude oil is going to outperform gold. So if you were to look at this, this here is a outperformance of crude oil, an era of crude oil outperformance. This is an era of a gold outperformance, which is a big recovery phase of real estate. And then I think we're going to break back up into another big outperformance of crude oil. So all of these things mean something, and they're all interconnected. If I have that view, and I think that crude oil is going to go higher, another thing that I can look at is the PPI to CPI ratio. That ratio there, and I back out, this thing is telling me that we could have a move back to 1.17. What this is a double bottom. And the projected move of a double bottom is the bottom down here to the breakout area. Then you project that up. And what that is basically going all the way back to this 1.2 level. We're at 0.84 right now. This move that could potentially be coming is larger than the 1970s move. This here is the 1970s move where the producer price index outperformed the consumer price index. And that is the move right there. And you can see how much farther we have to go in terms of distance to get back to that level. So what I am stating, or what I think could potentially occur, is that we get into a very inflationary time frame based off of the producer price index to consumer price, which means producer prices are going to accelerate in relationship to the consumer price index, which means you're in an inflationary environment. That inflation could be driven by two areas, I should say, not sectors, but areas. It could be driven by government deficit spending. They call it fiscal policies, fiscal spending, or it can come from credit expansion in the real estate market. That's the two areas that inflation comes from. And I think that we could get both. We could get both. And that is what that is suggesting. And we've got crude oil outperforming gold. What the way that I look at the markets, guys, is it's one gigantic puzzle, and you just fit puzzles together, and everything is interlinked together. So one sector that seems by itself is associated with other sectors. And the market conditions are what move these things over time. It's whatever you subject the herd to. If you subject them to a bunch of inflation, they're going to behave different than an era that has very little inflation. And then the herd creates these patterns to tell us kind of where we're at in the cycle of inflation. And I think that we've got longer to go. We've got more to go. So it's the combination of all these charts, the combination of all these ratios that tell me that paint a picture of the data that is being drawn out by the herd, by the markets. And then you just piece it all together and come up with what you think could potentially happen. Coming back to the channel here. The software I'm using is called TradingView. TradingView is the software I'm using. So it says, awesome valuation techniques. Learn so much from watching your channel. Today, silver is the cheapest and most profitable. Do I agree with that? Silver is in higher demand as industrial metals in short supply. I bought silver cheap and wait for a bull run. Silver is cheap. It is very cheap. So is platinum, and so is gold. All of the precious metals are cheap. And the only thing I'll say that's negative about silver is if we get a very big move, there are a lot of retail investors that hold physical silver. They do not hold palladium. They do not hold platinum. They do not hold rhodium. So when prices do move, there can be resistance by individuals selling their physical silver and or physical gold. We don't see as many people holding platinum. Donnie says, I don't agree. Silver has not moved in over a decade. That, in my opinion, is not a very good reason to not buy something or to buy something. Silver production is not controlled by silver demand. It is mined as a secondary metal as a byproduct of mining other metals. What is the track record of using ratios in the last 15 years for silver? How reliable is the ratio technique with silver? Well, the market conditions are what drive the price of silver. It's not the ratio. The ratio doesn't predict anything. The ratio is telling you if something is expensive or cheap, and that's all it's telling us. It's not saying that that we will necessarily go higher in any time frame. The market conditions is what determines the movements of the ratios. And then what you can do is you can chart, gold to silver. So here's gold to silver ratio. Then you can chart over time, are we breaking a support or resistance level? Like here, we broke to the upside, did a retest, and we're probably going to break higher in the ratio. So you can apply technical analysis to the ratios, just like you apply technical analysis to anything else. What I think silver is going to do is I think it's going to drop. And the reason I think it's going to drop is based off of the market conditions. When does silver go up and when does gold go up? Gold generally goes up towards the end of a cycle, the real estate cycle and business cycle. As it gets nearer and nearer and we start to roll over or slow down, or we get stuck in a very high inflationary environment and interest rates continue to go up and people lose faith in the bond market and their currencies, that's really when gold awakens. Same with silver. The last time that occurred was the 1970s. It was a very inflationary environment where the herd, humans, interacted with each other and created very low ratio where silver outperformed gold. Silver went up from like $1 to $50, about a 50x. Gold went up like 20 something x. So silver did a 2x better move than gold did during the 1970s. Now, People are going to say, "Oh, well, we went off the gold standard." Guys, it's the same, roughly the same valuation occurred in 2000 as it was in the 1970s. And this is the big second move of the K wave, the Kondratiev wave. That's what a lot of people think, and that's what I think too. So under those market conditions of an inflationary environment that I was talking about, the PPI to CPI ratio, you got to get all these things kind of aligned. They all are interconnected. I think that silver is going to outperform. I think platinum is going to outperform. That's my opinion, because they're more. Platinum is a very inflation sensitive material, and I think it's lining up technically to break to the upside. So I think it's in full alignment. So, and again, guys, here's one thing I really like about markets. All right. Here's one thing I really like about markets. The opinions that people hold, they don't matter. There's going to be someone who's right and there's going to be someone who's wrong. What it basically comes down to is if I'm going to make money, it's based off of the strategies that I deploy and my emotional stability and discipline and the things that I've learned in the markets. Other people's opinions do not matter. They can be right, they can be wrong. It doesn't matter to me because I'm going to make my own decisions. And I'm going to base it off of what I know about the markets, what I think about the market conditions, what I think about the ratios, where the value is in the markets, and how those things are going to interact with each other. There was a lot of people that told me I was wrong the entire time I was investing in 2020 and 2021. And it proved that I still made money. Whether I was right or wrong in the long term or short term doesn't matter. I still made a good chunk of money, a lot of chunk of money in 2020 and 2021. Kathy Wood said we were never going over $35 a barrel. A lot of people said, why would oil go over $100 a barrel? There's no way. Everyone told me there's no way. No way. There's no way we're going over $100 a barrel. No way that you're calling for $200, $250 or greater oil by the end of this bull market. And then what people do is they'll take, like near-term market movements in 2021, and they'll be like, look, it's going down. Your prediction is wrong. And I'm just like, guys, you're idiots. Like that is not what I am predicting. I'm not predicting anything with the short term. I'm predicting that by the end of this bull market, the end of this bull market is going to occur somewhere between 2025 to 2030, somewhere in that range. Okay. I don't know. We're not close enough to it yet to really say, yes, we're right on top of it. But I'll let you know when the housing market rolls over and all that stuff, when I think it could potentially occur, because it's going to be 18 to 24 months after the housing starts kind of roll over. That's my guess. And I don't think the housing starts are done. I think even if they slow down in the short term, we're not in a hyper supply phase. We have a long way to go. All these people who disagree with me don't know anything that I just said. They don't know anything about that. They have no idea what I just described. And in order to follow at least my train of thought, I think that is what's driving the inflation. That's what drove it in the past, and there could be other drivers out there now that are driving it, which are now deficit spending, stuff like that. So I am in, when somebody says something that disagrees with what I say, okay, but do they know what I know? Maybe, maybe not. I don't know. And most of the people that I listen to on YouTube is the same people that everyone else listens to, and I can tell you not many people view the markets the same way that I do. So I'm going to be in disagreement with a lot of people. And guess what? I'm completely okay with that, guys. I'm okay with sitting outside of the herd. I'm okay standing on my own thoughts. And it's worked out incredibly well for me to do that. Incredibly well. My entire portfolio in probably 2020, 2021 went up like 700, 800%. Somewhere in that range. 700 something percent. Eight times roughly. There were some really big gains. And then it came back down some during, it cycled back and forth and consolidated over 2022. And now it broke back out in 2023 because uranium really took off and a lot of the oil stocks broke out of their consolidations as well. And energy service. So we'll keep going. Um, uranium enrichment. Yeah, uranium enrichment is going to be a good area there. That's for sure. Coming on down. New home construction in Sweden has dropped 65%. We are short in housing. Need to build 60,000 a year. Bond maturing and banks don't give new loans to building companies. That could be a problem. It's not going to tank the housing market if we're short in building homes. So I think the housing market's going to remain quite resilient in some areas. Were other housing cycles dominated by big banks buying out whole swaths of inventory to run as rentals? Well, here's another thing that I'm going to talk about is where's money going to rotate if the bond market, if people get scared of the bond market? Where's it going to go? Where are trillions of dollars going to go? Can't go to gold because there's just not enough gold. It can't go to silver. Silver's way too small of a market. It's not going to go to commodities because commodities are just, they're nothings. If money has to move somewhere, it's going to just buy whatever it can. If people get scared of the bond market, it's going to buy everything that is solid. That includes real estate. So, yes, big banks are going to start buying a bunch of real estate, I think. What else are they going to buy? You're going to go buy a bunch of bonds that are going down? I don't know. So it says, you mentioned in another video that GDP is velocity of money times money supply. I was reading a book from Howard Marks named The Market Cycle. He defines GDP as numbers of hours worked times productivity. Well, that is real GDP. I'm talking about how they measure it. Like here, guys. Here's gross domestic product, right? Gross domestic product. So here's GDP, okay? Gross domestic product. So this is gross domestic product. I am going to, so that's GDP. I'm going to put M2 money supply times M. So this is going to be money velocity, all right? So here's M2V, money velocity. So this is money, M2 money supply, and M2 velocity. I'm going to put GDP overlaid on top of it, all right? There's GDP overlaid on top of it. Can you even tell the difference between those two? Tell me the difference between the orange line and the white line when I back out. M2 money supply times the money velocity is GDP, which is the orange-yellow line. This orange line that's here, that is what it is. Look at that. They're basically the same thing. So tell me that those things are not the same. Tell me that that's not the same. Come on, guys. You know I do my homework. Come on. So that it's the same thing, in my opinion. Okay, coming on down. 1 second, guys. All in on Brazilian commodity stocks. Let's do this. Yeah, commodity stocks are. Brazil's good too. Oil has not performed that well over the last month. Don't know why. Oil is down 6% in the last month. At least gold is up 9%. Uranium ETF is up 6%. Guys, I don't play the short term. Like, I don't know. I'm not a short term trader. I buy stuff and I hold on to it for years. I bought oil, well, I should say I bought oil equities and natural gas equities in September, October of 2020. I bought a whole bunch of it. I'm still holding. And that's over 3 years. Why would I sell it? What else is there to buy in the market that's better than those asset classes? They've got inverted head and shoulders. Why would I sell that on a shoulder? I mean, that's just, it's stupid. Like, it's not smart to do. Guys, the way that you make money is you take a position, you take a big picture view, and you look at the big picture view, and you look at the big charts, you look at all the data. If the PPI to CPI ratio is putting in a double bottom and it's about to break to the upside, and there's a lot of upside runway, well, the most inflation-sensitive asset is oil. But does that mean it's gonna work on a month-to-month basis? No, it doesn't mean that. And I'm gonna be somewhat honest here, and I'm not singling out this person or anything, but usually new investors focus on month-to-month or quarter-to-quarter. Really experienced investors They buy things when they're cheap and they wait years for that to occur. Go look at anyone who's good at investing that's in the business that is really, really good. Go look at Cuppy, Harris Kupperman. Go look at Chris McIntosh. Go look at some of those guys and see what they do. They take positions when things are really cheap, and then they wait. They may have to wait 10 years. What they do is they find a gigantic gap in the market, a mispricing. That mispricing occurs when the market conditions are unfavorable for an asset. So when you buy the asset, no one wants this. You're buying it when no one wants it. Then you wait, and then it usually appreciates massively, where you can gain a whole bunch of money, obscene amounts of money. And if you can do it and get an entry point when everyone is really fearful, even better. Even better. So, in my opinion, people who talk about month-to-month movements in the very short term, they haven't been in the markets that long. They haven't made any big money. Because if you're worried, well, why is oil down over the past month? That's just too short, guys. It's too short of a time frame. Markets are going to cycle up and down. We're in a consolidation. We came back and consolidated from oil from 120 down to whatever, and then we're going to get another big leg out of this thing. That's my viewpoint, and I'm going to ride the whole thing. I'm not going to try to time the short term. I'm going to accumulate on pullbacks. Some of the equities never really pulled back that much. Yeah, they pulled back like 30, 40, 50%. That's not a lot for how much they went up. I mean, they went up massively off these bottoms. 20 baggers, 30 baggers in some of the companies. And then they pull back 30, 40, 50%, depending on the company. And a lot of people are going to try to time the short term. Guys, it's not worth timing the freaking short term. It's in my opinion, it's not worth it. I'm going to accumulate on pullbacks because we're in a bull market. Go read Jesse Livermore's, what is that? The Reminiscences of a Stock Operator. Go read that book. Read it like 5 times. Go read what some of the quotes are in there. We are in a bull market. Buy the dips, just hold on for the rest. Comes back down, buy it, let it go. That's where the big money's made. The big money is made by lining up the big bull market move. And it's going to take some time for some of these, if they're in bottoming patterns, to get out of those bottoming patterns and start to move up. Just takes time. I live in Brazil. It's great value. Vale, yeah, Petrobras. The interest rate pause occurred a month ago, but the market is now just figuring out the pause is here. This is the time commodities and especially uranium start to rip. Yeah, it very well could be. Very well could be. And then, yes, I say Camco, not Cameco. Cam-A-Co. Cam-A-Co, guys. Cam-A-Co. How can precious metals explode if they are manipulated? I've watched the market for a few years, and every time it shows strength, it gets hammered down. Guys, that's the whole reason that you want to buy it, is because they're holding it down. It's going to fail at some point. The market's going to overwhelm them. And I hate to say it, but China and Russia are going to be on pro-gold moving up side. So it's basically the East versus the West. It's like financial warfare is going on right underneath us. They're going to drain the physical from the West, and then they're going to say, good luck. Good luck. I'm on the east side here because I'm not pro-East. I think they're going to win because there's a physical, there's actual physical amount or supply of this stuff. And when you dwindle it down, we'll see where it goes. We'll see where it goes. And then people will really panic. And then it will really go. It will go up a lot when people figure that out. Anyway, so here's another. I know there was one I missed the question. I don't know where it went here. About why do I wanted to answer it, and I don't know why I didn't go over it. So let me answer it. I'll just paraphrase kind of what it is. The question was, if I'm already a millionaire, why do I still do these videos? Why do I have a website? Why do I do all that stuff? Well, I created that in August of 2020. That's when I created it. I was displeased with not getting a merit increase, displeased with my boss at work. I naturally have always watched the markets. There were times I didn't watch as much because I was just working so much when I was younger. But I really focused on the markets August of 2020. I started a channel because I thought a commodity bull market was here, and I wanted to talk about oil and uranium. And you can look at all my old videos. And during that time, I knew that there was going to be a commodity bull market, so I figured, well, if there's going to be a big commodity bull market, why don't I start a precious metals commodity kind of investing channel talking about commodities because that's where I think the next big move is going to occur. And another thing, like having millions of dollars, like even if it's like 1 or 2 million or whatever, it's not a lot of money. If you're raising a family, and depending on where that money's located, if it's a bunch in 401ks and IRAs, yeah, it's tax shielded to some extent, but I can't take it out at the age that I am. So, and I have money outside as well. It's just, having $1 million or $2 million in a family of five, it's not that much money. It's not. So I'm going to continue to do things that bring in income until I feel very well off and very comfortable. And then I'm going to continue to probably do this. Why? Because I like doing it. I like sharing my experiences. It keeps me on top of the markets. It forces me to be on top of the markets. Every single time I come on and do a daily technical analysis update, I am now updated myself. Not just you guys, but myself. And I want to help people. I mean, where I find enjoyment, I was watching a Simon Sinek clip or something like that, and he was talking about finding your why. Why are you doing something? And I'll just say this. Every single year since I graduated college, I would go and look at technical analysis. I would look at charts. I did a whole bunch of fundamental analysis way back in the day. I would read a lot of the analyst things on companies. What a waste of time. Don't do that. And there's a lot of things that I did that I just naturally went into it. And I can't tell you, like, I can tell you why I did it. I wanted to make money outside of the 9 to 5. I didn't want to work at 9 to 5. I didn't want a boss. I didn't want somebody telling me what I can and cannot do. I didn't want someone dictating the hours that I had to work. I didn't want any of that. So what I did is I naturally migrated towards the finance investment side. I did that right when I started working at 22 years old. I didn't know what I was doing. I just, fumbled around for a decade or so. And now I'm like 1,000 times better than that. I mean, well, 1,000 times nothing is zero, but I'm way better. I'll just say I'm way, way better than what I was when I first started. And it took many years and a lot of trial and error. And it wasn't like I was reading books. I don't know if they would have accelerated. I went to a couple of technical training courses online where people showed me. I'm a very visual learner. I like seeing things and how someone would set it up and draw the lines and do all that. And I do have technical trading trainings on the website as well. If you guys want to see that, and I have videos showing you what I do. And then I started doing my own thing after that, which works for me. Then I developed the 3 pillars: ratios, technical analysis, and market conditions. And that is what I've learned. It doesn't mean that I pulled this from somewhere else. It's just I looked at the data, and that's what the conclusions came to, is I needed those 3 things. And that's what I did. It's like, just said, this is what I need. And I developed it myself. I didn't develop it from a book. Maybe there was inputs from people like stating certain things that I pieced all this information together to create it. But yeah, that's what I did. So I feel like I need to like help people. I don't know. I like doing this. I would do this even if I didn't have this channel. I would still go and look online, and I would still look at charts. I would still look at the markets. I would still do exactly what I do today. There'd be like no change. I'm just recording it and talking about it. That's really the only difference. And I want to make sure or try to help other people because I think there's more, I don't know, satisfaction in doing that. So let's say I make a bunch of money. Who gives a crap? Right? I mean, what's the point of it? So I get a bunch of money and what? I'm going to go buy a Lamborghini or something. What's the point of that? I don't even want a Lamborghini. Like it's not even that. So why don't I try to help some other people financially be better off than they were before? I mean that's really what it is. Um, I'm still going to do the same things that I do, whether you put a zero on the back of my net worth or not. I'm still going to buy cheap shirts. I'm still going to drive similar cars. I'm not a flashy guy. It's not my cup of tea, man. I'm really interested in ideas. I'm very interested in being solo. I mean, I like working in groups, but all of my happiest moments were not in groups. It's when I just like figuring stuff out. I like doing things where I have a financial benefit to figuring something out. And I am highly driven by that. And when I go in these large corporations, there's no financial benefit to myself when I figure things out for other people. Everyone just tries to steal ideas and that. Some managers will even tell you that to your face. I'm just like, really? I thought you were joking about that, but you really did that. And I didn't see the rewards for trying that hard. And what I love about the markets, I mean, I love this about the markets. It does not care what gender you are. It does not care what ethnicity you are. It doesn't care about anything. And your returns are a reflection of the strategies that you come up with. And I love that. I love that. It's like math. I love math. Why do I love math? You can get an answer, and the answer is either right or wrong. There's no BS attached to it. It's not, well, I didn't like the sentence you wrote there. Why? It's because it's 4 words and it describes exactly what it needs to be. I cannot stand people who throw in 800 billion words to say something that is super simple. A Honda Civic drove by. Even better, a 4th gen Honda Civic that was an automatic transmission drove by. Okay, I get it. Pretty much know what it is. Someone else will say something about some buggy on 4 wheels. It's like, oh my God, just tell me what it is. So, I mean, that's a part of it is figuring out what you like as a person, what your why is. And I'm still trying to figure all that out myself to some degree. But I can tell you, I don't like big corporate worlds. I just don't like that world. So that's why I do it. I do it because I would be doing this no matter what. I just love doing it. And I think I want to help people also who love doing it get better at doing it. And that's the ultimate driver, guys. That is it. So I'll end it there, guys. That's a pretty long clip. There's going to be a video that's going to be released on Capital Cosm with me. You did an interview with me. You can watch that whenever it comes out. Look for it. And so that'll come out, and I'll post it on the website as well. And that's all I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like to join our community. We do have a platinum question and answer session coming up at 5 p.m. Today, which is Sunday, and it's Mountain Standard Time. So if you want to ask me questions directly, you can sign up and you can ask me whatever you like, and I'll answer with whatever I know about it. I'm a truthful guy. I'm never going to lie to you. I'm not going to say I know something that I don't know. I will tell you if I don't know, or I'll try to research it, and we'll try to play this bull market as best we can together. That's really what it is. So we'll catch you guys next time. This is Finding Value.